Welcome shareholders and visitors to Wellard's 2021 Annual General Meeting. My name is John Klepek and I'm the Executive Chairman of Wellard. This AGM today remains online only because of the travel restrictions that prevent all of us being present in the same room. In future and barring pandemics or similar emergencies, we intend holding combined in-person and online meetings to allow shareholders to participate wherever they may be. Later in the meeting, we'll be formally voting on a special resolution to hold hybrid general meetings in the future for Wellard. As to the voting, shareholders have been verified to vote during the meeting will receive a polling form at the start of the meeting via email for each of their holdings. While we proceed with the meeting, please check your email to make sure you have received your polling form. You'll receive a polling form for each of your shareholdings, so if you hold shares in more than one account, you'll receive more than one form. Completing polling forms can be submitted at any time prior to the conclusion of the meeting, but once submitted, they cannot be changed. Questions for the meeting. Shareholders will be able to ask questions by typing them into the webcast portal or clicking on the raise the hand icon to ask a verbal question. Questions relating to specific resolutions will be addressed at each resolution when we get to that part of the meeting. General questions will be on the presentations will be addressed at the end of the management presentations. Note that you'll be asked to identify yourself when you ask a question. Joining me today is our board who are participating in the locations as indicated. Fremantle for ourselves, Philip in Singapore, Kanda in China, and John in Queensland. Also, I welcome our executives who are joining us, Mr. Paolo Triglia, our CFO in Singapore, and Mr. Michael Silbert, our Company Secretary and General Counsel here with me in Fremantle. And also to our auditors, Moore Stevens, who will join us from their office in Perth, and FTI, who are present with us here today for the technical running of this meeting. As with previous years, I'll provide a short chairman's address before providing more detailed information about the operation and finances of the company in my executive capacity, alongside the company's CFO, Paolo. For the investors reading this speech on the ASX platform, the notes provided under each slide in the company presentation provide additional information and commentary on the information presented in the particular slide. FY21 was important for Wellard as we were able to post our second successive profit. It was important for Wellard, board and management, to prove that the small 2020 profit was not a one-off, but could be sustained and actually increase substantially. Despite issues during the year with extended dry dock of the MV Ocean Ute and the sudden temporary closure of the New Zealand live export industry after the tragic sinking of the Gulf Livestock 1, which is a non-related vessel, we were able to record a profit of $1.9 million US for 2021. This improved financial performance and business resilience has allowed Wellard to focus on the medium-term future of the business, which I'll provide more detail on in the AGM presentation, along with further details about the outlook for the balance of FY22. I will now move to the presentation. Let me remind you that the company now reports in US dollars, and everything that we talk about today will be in US dollars unless stated otherwise. I will not comment on the P&L and balance sheet, as Paolo will make a commentary on this in his address that follows mine. The voyage success rates operationally remain a key performance measure for animal welfare. This reflects the quality of the infrastructure and attitude of our crews, and also reflects the quality of the livestock and onboard stock when assembled and recruited by our export customers. For example, a very recent shipment that we completed just in September on the MV Ocean Drover from Uruguay to China with some breeder cattle is actually a 35-day voyage, 9,500 cattle loaded. The success rate was 99.9, which is an outstanding result. This goes a long way to ensuring continuing demand for our ships. Our overall safety performance has and does remain strong. Importantly, in the industry we're in, every year is a different year, and FY21 is no different to the past history of the company. We have shifted geographically the centre of gravity of the operations. More than half the cattle exported in FY21 were to North Asia from Australia, New Zealand and Uruguay, comprising breeders, compared to just 17% the year before. The decrease has come in the Australian exports to Indonesia and Vietnam, as the volumes overall dropped by 30% year on year. So we have effectively pivoted from a predominantly Indonesia and Vietnam focus of slaughter cattle and feeder cattle to breeding cattle to China, and that has continued into FY22, where that 57% figure shown there in FY21 will be even higher. Investment into the future. The MV Ocean Ute is now 27 years old. It needs replacement. The advantages of operating modern vessels include enhanced animal welfare outcomes from improved livestock services, increased demand for more progressive livestock exporter customers, reduced operating costs, reduced maintenance costs, improved reliability, safety, and therefore the availability of the ship. And also, importantly, in the world that we live and move into, reduced carbon emissions. Wellard intends to be the ship operator and not the ship owner. We are progressing the planning and feasibility of a new build to replace the MV Ocean Ute. The size will be bigger than the Swagman, but smaller than the Drover. And the low emissions propulsion is a non-negotiable as part of the new ship. The design studies are also looking at multiple areas for some added efficiencies other than just straight CO2 emissions abatement. The propulsion systems, fuel technologies, cargo area efficiencies, controlled lighting systems, solar electric power plants, advanced propulsion and hull cleaning systems, digital monitoring and predictive maintenance, higher levels of automation than we currently see on the ships, use of green recyclable materials wherever possible are some of the areas that we are looking at. Global shipping standards. Wellard has long campaigned for the highest shipping standards throughout the Australia and global industry. Recent research indicates that the average EU-approved livestock carrier is a 41-year-old vessel, built as a general cargo carrier and converted for livestock at the ripe old age of 29 years. In comparison to that, the average age of container ship fleet of the world is only 13 years. As a result, old inferior vessels, which are more prone to breakdowns, are carrying some of the most sensitive cargoes in the world at high risk. The International Livestock Carrier Fleet is regulated by the International Maritime Organization, IMO, whose oversight is minimal and tends to deliver barely compliant livestock handling and low animal welfare outcomes. Under the current IMO regulatory regime, animal welfare is more likely to be compromised because stocking densities are largely unregulated and there are no minimum standards for the supply of air, feed and water. This needs to change. If an incident occurs, the public around the world doesn't distinguish between the good and bad operators. Instead, it tarnishes the whole industry as a whole. Wellard, as I said, Wellard is and will continue to lobby for strengthening of the Australian Maritime Order 43. We have actively lobbied for and will continue to for the age cap on ships to be set at 25 years, minimum pen area turnovers, and also for purpose-built vessels for livestock carrying only rather than converted ships. COVID-19, the response and impacts on our operations. The COVID-enforced closure of the wet markets have changed the purchasing location, not the demand for cattle. The price of the cattle is the issue, not COVID-related drops. So the drop in volumes that we've seen to our near neighbours is price-related, not COVID-related. Operational impacts, however, are much greater. Pre-COVID crew fly to from the next port of call now have to sail via Manila to conduct crew changeouts. The diversion to Manila increases ballast voyage sailing times, which has both a direct and opportunity cost to the company. Before embarkation crew must test negative, quarantine in country and subsequently test negative, which lengthens the time before they get on and off the ship. It has also been difficult to access vaccines for seafarers, but having said that, we just completed vaccination of our crew at our cost when the Swagman was in Singapore as an example. Each port in each country has employed its own COVID-19 measures, which our staff must adhere to. FY22 market outlook. Australian cattle to Southeast Asia. Cattle availability and price post the top end wet season around March next year will largely determine the livestock, the demand for livestock export vessels exporting from Australia for the balance FY22 and into the first half of 23. Based on the current supply dynamics, we are looking to 2023 for any significant change. However, unexpected events could change this view, and historically extended periods of extreme high prices in any commodity usually have dramatic endings. We would prefer Wellard had a greater diversity that its vessels were deployed on. However, to be able to pivot to a very strong breeder market is a good result for our shareholders. First half ship utilisation has been good with no significant operational issues. Forward ship bookings are shorter for the start of the second half in comparison to where we were at the first half of the year, and with the expectations of slightly lower utilisation rates for the second half of FY22. Most of our shipments have and will be for breeders in 22, with any gaps between the shipments taking up with voyages to Vietnam and Indonesia. Filling those gaps in seasonal low points like the current wet season is, with the very low or extremely low availability cattle, is proving difficult, and lower utilisation for the two smaller ships than what we have had to date will result. Added to this is the bunker price. As an example, I'll quote you the bunker price that we paid, the 20 port average for the very low sulfur oil fuels that our ships use. In January 21 was US $4.20 a tonne. That is increased currently today to $630 a tonne. Yes, some of that is passed on to our customer base, but as with all increases in cost, some has to be absorbed as well. The Brazil to Turkey market, which 2 years ago was extremely buoyant, remains sporadic, and the Australian sheep to the Middle East is at even lower, record low volumes, similar to the cattle supplied to our northern neighbours. That concludes my presentation. I will now hand over to our CFO based in Singapore, Mr. Paolo Triglia, for his review. Paolo.
Yeah, so thank you, John, and good afternoon to everyone. So my part of the presentation relates to a synthetic presentation of the financial information already included in our annual report. And I start to say that financial year 2021 has been another important year for Wellard. I would say an year of consolidation from the financial point of view, which was marked by important results that I have tried to summarize in the 5 separate sections of the slides. So the first one, the resilient business model, refers to the external chartering activity that we are now focusing on, that I believe has proven to be robust enough. Sorry, I'm still on the slide before. Okay, thank you. And so, as I said, was referring to the external chartering activity that we are now focusing on, and has proven to be robust enough to overcome and recover from the many challenges that we went through in the last year. It is also an activity that we continue to expand, serving new market and customer, and strengthening Wellard market position. So the second section relates to our continuous attempt to reduce cost, and despite our already very lean structure, we were able to deliver in financial year 2021 another $3 million or 41% year-on-year G&A savings. The third section referred to our profitability, a result that was achieved thanks to the combination of good operating profit margin, G&A savings, and material reduction in financial costs. And that has started, as John said, to give decent results with our net profit increase from last year from $200,000 to $1.9 million this year. The fourth section referred to solid capital structure made of tangible asset, our vessel, with now leverage ratio that are far below the industry standard. And this deleveraging strategy has also allowed this financial year a further 84% reduction in financial cost. And finally, and I believe not less important, we continue to improve our cash generation from the chartering activity, plus 39% this financial year, which allowed at the end of June 2021 a solid cash position of $6.7 million after the investment of $7.3 million in ship maintenance and improvement. So next slide, please. So as already said, a resilient business model refers to well-proven ability to quickly adapt to disruption in the external business environment, like the already mentioned COVID pandemic, for example, or the sudden temporary closure of one market, like what happened last year in New Zealand. So despite some adverse conditions, we were able to maintain continuous business operation and safeguard our people, very important, our asset and our brand. So in terms of numbers, the current financial year is seen as a 26% year-on-year drop in charter revenue, closing at $43.4 million, which was mainly due to the sale of the Ocean Shearer last year, the planned dry dock of the Drover and the Youth, with the consequent increase in off-hire days, and to external and uncontrollable to us isolated events that impacted our operation. This year, as John mentioned before, a further challenge came from the COVID-19 pandemic, which affected our operation with logistic challenges related to vessel servicing and inspection, and especially for many regulatory restrictions related to crew changes that has caused many deviation in port outside our trading routes, and with consequent loss of time and money. However, we were able to keep our people and system safely in place and ensure the continuity of our operation. So despite this, the gross profit margin increased by 16.7% to 37.1% in the current financial year, showing an efficient utilization of our vessel, which is a crucial factor, I believe, that should allow Wellard to continue to be profitable also in the future. Finally, this financial year marked the completion of our strategic transition from a live cattle exporter to a shipping logistic company, given that external chartering activity represents now 99% of our group revenue, and which also demonstrate our ability to capture and maintain a larger share of the existing market. It's, however, I believe important to know that Wellard still maintains its export license and therefore can resume trading operation if the economic condition will allow, which is something that the board and the management is continue to monitor. So next slide, please. So despite the already very lean structure, we have continued our effort in cutting the overhead and achieve another $3 million savings in financial year 2021, with the G&A expenses that reduced from the $7.4 million in financial year 2020 to the $4.4 million recorded in financial year 2021. The biggest savings, once again, was on labor expenses that in financial year 2021 decreased by another $1.5 million or 33.8% compared to the previous year, mainly thanks to the outsourcing of our technical management. As pointed out in the slide, this year further decrease obtained has contributed to the cumulative reduction of 88.5% over a 5-year period, even though a great proportion of this saving, especially from financial year 17 to financial year 19, came from the restructuring and strategic transformation of our business model. And we expect now that the G&A will remain not far from this level for the next few years. So next slide, please. So improved profitability. We are finally happy to report the first significant net profit of $1.9 million after posting the small profit last year. As already said many times, we are happy of this result because financial year 2021 has been a very difficult year, troubled by uncontrollable external events, that have reduced the revenue stream from the operating activity, and as a consequence have driven down the group EBITDA by 25.6% to 11.6 million. However, to make a comparison with a meaningful comparison from the previous year, I believe is important to notice that financial year 20 EBITDA included a one-off gain of $5.3 million, and therefore if we compare only the ordinary activity of the 2 years, financial year 2001 EBITDA is actually $1.3 million higher than the previous year. Another promising indicator is the operating profit margin that, in spite of reduced EBITDA, remain steady or actually slightly improved by 0.4%. And this is thanks to efficiency in operation and a lower cost of the structure. Last important result to mention is the substantial reduction in financial costs that are now only $1.1 million, thanks to the leveraging strategy of the group. And as a result, our interest coverage ratio improved from 2.2 times to 10.8 times in financial year 2021. And this reduction in fixed cost, I believe it is extremely important for the resilience of our business model in the future. So next slide, please. For the balance sheet, it was a year of consolidation and investment, with $7.3 million spent on the dry dock of the Ocean Rover and the Ocean Youth. This important investment in vessel maintenance and improvement has, however, caused the $1.2 million increase in net debt and the working capital to turn negative of $3.2 million at the end of the financial year, a position that we expect to turn to positive in the next half-year account. However, our focus on capital efficiency is demonstrated by the significant improvement of our debt to capital ratio, which with the total debt that at the end of June 2021 represented 24.4% of the total group funding. Likewise, total ship debt fell by 32% on a year-on-year basis, representing at the end of June only 25% of the net book value of Wellard vessel. So next slide. And my presentation ends with the cash flow result. The decrease in revenue has clearly drove down the operating activity to $10.6 million, which is $3.2 million less than in financial year 2020. However, both the free cash flow and the free cash flow to sales ratio increased by 2.8% and 39% respectively in the current financial year, showing that the group can now generate more cash out of its sales following our focus on the external chartering activity. So at the end of June 2021, Wellard ended up in having $6.7 million in cash and cash equivalent, which is a good buffer considering that almost all the dry dock of the Youth and the Rover was already paid. So this concludes my brief financial review, and I thank you all for your attention, and I will now hand back to Mr. John Klepek, who will run the formal matters for resolution at this meeting. Thank you very much.
Thank you, Paolo. Before moving on with the formal part of our meeting, I will now open the floor to questions. If you have any questions relating to either my or Paolo's presentation, you can now ask them. If you have questions relating to the resolutions, we'll give you a chance to ask them when we proceed into that part of the meeting. As mentioned before, we can take your questions verbally or by text. We will identify you so that meeting participants know who is asking the question. If you're a shareholder and want to ask a question verbally, please press the raise the hand icon. If you're a shareholder and want to type in a question, please do so in the question box that appears on your screen. Our auditors, Moore Stevens, as I mentioned before, are also in attendance in their Perth office to answer any questions on the financials.
We have no questions yet, John.
As there are no current questions, we'll move on and I'll open the formal part of our annual general meeting. I will ask our company secretary, Michael Silbert, to assist with this part of our meeting as we progress through. There are 5 agenda items today, which are listed there for your viewing. I will take questions related to each agenda item as they arise, and I'll address any other questions at the conclusion of the meeting. I note that this notice of annual general meeting has been distributed and is taken as read. Our company secretary, Mr. Silbert, on my right here, will explain the voting process.
Good afternoon. Thanks, John. The voting process has been set out in detail in your notices of the meeting, and we have already received voting by proxy. However, some of you have indicated that you will be voting during the meeting. You should by now have received an email from us at the commencement of the meeting with your ballots in it. These are the most important things to remember as you go about managing your voting. Shareholders who have been verified during the vote, and thank you to those of you who answered our inquiries yesterday to conduct your verification, will have received your poll. The voting system and the meeting system are separate. So voting is by email. You don't do it on the screen. Please check your email now or whilst we proceed through the next few resolutions to make sure that you have received your polling form. We will keep the voting on all items open throughout this part of the meeting, rather than require you to vote resolution by resolution. The completed polling forms can be submitted at any time prior to the conclusion of the meeting, but you cannot change them once you have submitted them. And the chairman will advise us all at the end of the meeting when voting is about to close. Shall I go on with that?
Yeah, continue.
So the first item on the agenda is the receipt of Wellard's 30th of June 2021 annual report. And the text of the agenda item is shown to us all on the screen there. But note, this is not a voting item. It is an opportunity for any discussion or for some questions relating to this agenda item.
There are no questions online, Michael.
Okay, thanks. All right, well, we'll move to resolution number 1, which is the adoption of Wellard's remuneration report. And again, the text of the resolution is there for you to read, and it was there in your notice of meeting. This is a voting item, and in a second we'll display the proxies that we've received in support of the item. There have been voting prohibitions applied to this resolution in respect of the proxies we received. And there's another chance now on this resolution to have any discussion or questions in respect of the resolution.
There are no questions, Michael.
Okay, now remember, you don't have to vote immediately as we move through each resolution. You can save it up till the end. If you're on computers or on mobile devices, the voting platform, separate to the meeting platform, is active on both, so long as you can receive your emails. Once you've submitted your votes, you can't change them. And if you hold your Wellard shares in more than one shareholding, you will receive a voting form for each of your shareholdings. So if you have 2 holdings, you will need to vote twice. Cam, if we go into the next slide, we'll see the proxies received so far in respect of resolution 1. And as you can see, we've received very strong support for the remuneration report. You can vote for, against or abstain on your forms, and a reminder that the open votes will be cast by the chairman of the meeting in favour of the resolution. So shall we move to resolution number 2? This is again a standard resolution for public companies. It's the re-election by rotation of a director, and in this case it's the re-election of Mr Stevenson. You can see the text of the resolution there, and there was information about Mr Stevenson in our notices of meeting. Again, this is a voting item, an ordinary resolution, and if we can move across, we can see the proxies in favour and against and open. There is a chance now again for any discussion or any questions in respect of this resolution.
There are no questions.
Okay. All right, no questions. Again, same instructions: for, against, abstain in your form, or save it till the end and do them all. While you're doing that, let's move through to resolution 3. This is a change to our constitution, which by definition requires a shareholder approval. And this has been explained in great depth in our notice of meeting. It's the change to have us bring our constitution up to date with the very thing we're doing today, which is allow us to hold a virtual meeting. And in our case, we've elected to hold all future meetings, should there be no change in the support for this resolution, as hybrid meetings. And that means that we will hold them online, as well as inviting people in person to attend, so long as there isn't any kind of pandemic or other difficult factor that's prevented us, as it has in the last years. We did, you will have seen, we updated the language of this resolution after the initial release of our notice of meeting to make it absolutely clear what we were doing here. And if we move to the proxies slide, you'll see that we have received overwhelming support so far for this resolution. It's a special resolution which requires 75% support from voting shareholders, and you'll see we're at 99.94 of votes lodged as of 2 o'clock 2 days ago. And our, oh sorry, did I pause for any questions in respect of that resolution?
There are no questions.
Okay, no questions. Again, if something occurs to you, we can you can ask questions on any of the resolutions at the very end. And our last resolution, again, a very, very standard resolution for public companies. This is the renewal of the proportional takeover provisions in our constitution. You can see the text again of the resolution on the slide. I'll remind shareholders that this always has been a part of our constitution. This is not new language, but it is required to be refreshed and approved by shareholders every 3 years. So that's the support that we're seeking from you today. If you pop onto the next slide, again, we thank you for the support for that. I think it's relatively non-contentious, but very happy if anybody would like to ask a question or make any observation about that resolution.
There is a question. I'll just check that. Please, Michael, if we can pause for a minute.
Mm-hmm. Well, that looks like something we might address at the end. Shall we?
The question is, I wondered, it's from Mr. Jason Wang, shareholder. I wonder, does Wellard have any intention to distribute a dividend?
Do we want to address that now, John, or would you like to see?
Yeah, we'll leave that at the end because it's not actually in relation to the proportional takeover.
If you don't mind, we will come back to that once we just quickly go through this last instruction. So if we go to the next slide, we will leave you with some time to juggle your various devices and to attend to those of you who are voting. Please follow the, I hope, fairly easy instructions on the emails and the forms that you have received. I'll hand back to John Klepek, and we'll kick off with an answer to the question that we have received and read out, but please feel free to type any other questions into the box, or again, raise hand under the raise hand icon on your screen. Thanks, John.
Thank you, Michael. So in connection with that question, does Wellard intend to pay a dividend? Currently, our intentions are not directed at dividend payments. Our current intentions, we have the ute, which we're making a final repayment of the loan against the ute, which will be debt-free by the end of January. That is one use of the cash other than operation. We also intend to build the operational, cash balance where we sit at the moment to be able to become, as the business goes through its cyclical swings, etc., to be super resilient in the ups and downs. And the third piece of that is the future investment in a ship. So the finance piece of that, as we are progressing the technical and engineering part of the process of specifying what we actually are going to build, is also the finance of that. As I mentioned, we are not intending to be the ship owner, we are the ship operator. So, but there will be, Wellard will have to be involved in some shape or form of that. So that is a piece of work that is ongoing at the moment. So there is no intention to pay a dividend, depending on where all that falls out and how the operations progress over the next year or so. Obviously, we won't be building up cash balance, excessive cash balance for no reason. So hopefully that answers the question. Are there any further questions before we move on?
I'll just pause for a moment.
Give everyone an opportunity who's online. It's always difficult, not because you can see us, but we can't see you.
There don't appear, there are no further questions.
Thank you. There being no further questions, we will announce the results of the voting to the ASX when they have been tabulated. I thank everyone for their attendance today. In closing, I'd like to thank our shareholders for their continued support of the company. There are both opportunities and challenges ahead for Wellard. That is the nature of the industry that we operate in. We are, however, in the fortunate position that our business is far more resilient due to their balance sheet restructure, and Wellard's ships remain the ships of choice when exporters and importers need the medium or large livestock carriers for their trading. Wellard's team, from our shipboard officers and crew to the small number of Singapore and Perth-based staff and support team, have just demonstrated incredible dedication and resilience over the past 12 months to get the company to its present position. And it's important to acknowledge their efforts over the last 12 months and indeed the year before that. Our customers obviously have also played a very important role in Wellard's success, and I thank them for their continued loyalty as we look forward to the balance of FY22 and into FY23. And I personally look forward to when we do the next meeting, where we do have a hybrid meeting where we can join with you in the same room to have the discussion about the company. Thank you. On that note, I formally now close the meeting.